1, 2, test, 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 test. Yeah, okay. Hey, hello everybody, and welcome to Politics, Culture, and Some Other Shit. I know it's been a minute, but yeah, I've been really fucking busy. Like, stupidly busy, you wouldn't believe it. Bit of news first before we hit what we're going to talk about, which is the Silicon Valley Bank, which has collapsed. But before we get there, provided that there's still a country and an economy to tour, the Bonnevilles were touring the UK in April, starting on the 4th, which is like 2.5 weeks away, I think. We're starting in Edinburgh on the 4th. We're going to Glasgow, Newcastle, Montrose, Harlow, Bradford, Manchester, Leeds, London, Folkestone, Hastings, and finishing in one of our favourite places, Leamington Spa in St Patrick's Irish Club. 12 dates there, all in a row, no breaks, just the way we like it. We don't like the breaks because we just go into the pub and get fucked up and spend loads of money, and that's not why we go on tour. So yeah, so please share, share that if you can. You can find it on the Bonnevilles social medias and all that stuff, and we'd really appreciate it because we only had a few weeks to not to organise it. Normally this stuff gets announced months in advance, but this wasn't. This was only like a month, for reasons that we won't get into. But we're going anyway. But we really need you to share it, because one of the reasons that we really need you to share it is because normally what we would have done in the past is we would have taken out, adverts on Facebook or promoted posts. So because Facebook and these platforms, they choke. We got 12,000 people that wants to see our stuff on Facebook, and they choke our posts so that you don't see it. So they force us to take promoted ads or promoted posts, which we did. We did it. We've done it many times. We've done it for years. And then eventually they choke those as well. So you need to take out more of them to get. So you're paying and you're not getting the what you expect to get from it. They just don't show it. So that was always the way these things were going to go. They're that greedy, and so yeah. So now we're basically back to hoping that you guys will share everything, which we want you to do anyway. And most importantly, we want you to come and see us, buy the tickets. So go to the posts, and you'll find it on as I said, on the Bonnevilles Facebook and Instagram and what have you, on our website, thebonnevilles.co.uk, and you get all the ticket links there. So, what else? Personal news. You know that I was over the pandemic. We lost the band. We weren't making any money, and I have a screen printing business. I had a screen printing business that I did. So I did screen printing when I wasn't in the band, when I wasn't Bonnevilles, and but over the pandemic I lost both of those. So that was basically I lost my income, and yeah, so I had to take a job driving for one of the big supermarket crew, Asda, but Wednesdays I only do. I mean, I started out full time basically, and then now I only do a couple of shifts a week. And Wednesday's my last day. This Wednesday coming, I'm finished. I only do 2 days a week. But I'm finishing on Wednesday, and I can't fucking wait because I don't like it. Um, it's horrible. They're a horrible company to work for. It's a dead end job. There's no, you don't make enough money. It's a hard job too. Actually, believe it or not, it's actually physically very demanding. So I'm done with those. I might do a wee expose on my experience at some point, but not today. So I finished with those on Wednesday because the band is back, and I got my screen printing business back up and running again. So that's what I've been sort of putting all the money that I've been making while I've been driving into. So I got it started up again just before Christmas, and now I'm sort of getting busy, and it's great. All my old clients are coming back to me. I love it. Look, I printed this hat. That's my business there. I'll show you. There's it there. You can see there. Super 8 ink screen printing. So I print merch for bands, basically is what I do when I'm not in a band myself. And so it's great. And I love it here because I do it at the house. I've got a big garage at the house and I operate out of that. And it means then that I can sort of tailor my day to suit myself. So if I want to go out and doing a bit of training or a bit of exercise, I can go and do that and then do a bit of work. And then if I get a notion that I want to come into the studio here, which is just next door, and do some writing, I can do that as well. And it's great, and it kind of frees me up. I've got a wee bit of that. I think I figured out about a wee bit of ADHD, and I get easily distracted. So I do like to flit about and do different things over the course of the day. So yeah, it's great. But anyway, so, right, to the podcast. So yeah, I'll finish my thought there. Basically, that's why I haven't been very active with these podcasts over the past few weeks, because I've been very busy working and getting everything teed up, and then doing a lot of work for the getting the tour sorted out and stuff like that, and just haven't really had the time. Although I have wanted to come and talk to you many times because I do enjoy this, but I haven't been able to. So we're going to talk about the Silicon Valley Bank. Do you know what that is? Have you heard what that is? Let's get into it right now. So, the Silicon Valley Bank is, let me just pull it up. So, President Joseph Biden, there he is. And I've got a little up on the screen. By the way, come and follow me follow the podcast, like, share, subscribe. Go over to the YouTube, and you can see this video, because this is a video. So there's a little thing. So, the reason that this is important, that I think anyway, is because it has echoes of 2008, 2009, the last financial collapse that we went through under our capitalist system. So, and it all started much the same, although this is slightly different. Now, it has to be said, where those big banks, the Lehman Brothers and JP Morgan and all those guys, they all got bailed out. These guys aren't getting bailed out so far. I don't believe them. Basically, when they say that they're not going to bail these guys out, I don't believe them. But here's President Joe Biden, and this is what he says. Silicon Valley Bank. Biden says the U.S. banking system is safe. The U.S. will do whatever it needs to shore up banks after a string of failures raised fears about financial stability, President Joe Biden said. His comments came after the US guaranteed all deposits at the Silicon Valley Bank and Signature Bank, which both collapsed last week. And I've got a couple of videos to show you explaining what happened here. The US is trying to stop people taking funds from banks after the SVB, Silicon Valley Bank, collapsed amid a rush of withdrawals. Now, Silicon Valley Bank, it's not a well-known bank, but it's quite a big bank. And as you might suspect from the name, it's sited in Silicon Valley, in California, and it funds startups. Okay, so it does have a couple of branches and what have you, but it funds startups. That's its speciality. And it had made a lot of investments, buying bonds at a particular yield rate. And then when it tries to sell those on, because those yield rates have gone up since then, those bonds have become kind of, not valueless, but they've lost a lot of money, basically. So I'm not the guy to talk about, I'm not giving financial advice here. I am not the boy to talk about money, but or how banks work. But here we go. So back to the article. Americans should rest assured that our banking system is safe, Mr. Biden said. People and businesses who have deposited money with SVB, the country's 16th largest bank, fucking big enough, would be able to access all their cash from Monday, he said. Taxpayers will not bear any losses from the move, which extends protection beyond $250,000 in deposits, typically insured by the government. The cost will instead be funded by fees regulators charge to banks. Let me assure you, we will not stop at this. We will do whatever is needed. And then, how did the Silicon Valley Bank collapse? Well, here we go. SVB, with specialised lending to technology companies, was shut down by regulators on Friday. It was the largest failure of a US bank since the financial crisis in 2008. It came after SVB had scrambled to raise money to plug a loss from the sale of assets affected by higher interest rates. Word of the troubles led customers to race to withdraw funds, leading to a cash crisis. So that basically it was a run on the bank. Like, what's the most famous run on the bank that we can use as an illustration? It's a Wonderful Life, when townsfolk all try to get their money out of the credit union, the bank. Yeah, so that's basically what a run on a bank is. Authorities on Sunday also took over the Signature Bank of New York, which had many clients involved in crypto and was seen as the institution most vulnerable to a similar bank run after SVB. Blah, 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 blah. The US measures have reignited debates similar to those seen following the 2008 financial crisis about how much the government should do to regulate and protect banks. Mr. Biden called for tougher rules and emphasised that investors and bank lenders would not be spared. Well, if only he could do something about it. If only he was the president. And they knowingly took a risk. That's how capitalism works, he said. Well, fair enough. That's true. Building a culture of government intervention does not stop the future institutions, blah, 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 blah. So, there you go. So you know what the story is. You know the basics of what's happened. So, basically, they made bad investments. They're capitalists. They've made bad investments, and there's been a run on the bank, and that's them kind of in trouble now. And they've been took over. They've actually, the UK, so the British, let me see, just get the video here for you, get the right one. Yeah, so the UK startups, the UK tech sector is heavily invested in this same bank over in Silicon Valley. So the British government, the British government was involved. So here is a little bit of the what do you call him? The Treasury Secretary guy, the guy that looks after the money, right? Here he is talking about it. So we will.
The ripple effects from the collapse of Silicon Valley Bank on Friday are being felt across the world. The US government's now said it will ensure all SVB account holders will be able to retrieve any funds they have when they start their day today. A statement by the US Treasury and Federal Reserve said the plan will ensure the resilience of the broader US banking system. In the meantime, here in the UK, HSBC has acquired Silicon Valley Bank UK for just £1. The UK government says customer deposits will be protected and no taxpayer money will be used to bail out this bank. UK Chancellor Jeremy Hunt has just been talking to the BBC about
Jeremy
the
Hunt, sorry, forgot his name.
Well, there was never a systemic risk to our financial stability in the UK. The Bank of England governor made that clear from the outset. But a number of our most promising and important technology and life science companies had their money with Silicon Valley Bank in their UK branch. So we've been working over the weekend. I've been in constant contact with the Governor of the Bank of England, the Prudential Regulatory Authority, the Prime Minister, to work up a solution. We do not have that solution. A sale has been agreed to HSBC, which is Europe's biggest bank, one of the most creditworthy institutions in the world. And what that means is that all those really important companies that had deposits with Silicon Valley Bank UK can access their deposits, can access normal banking services as of this morning. It's a very important outcome. No taxpayers' money has been used, and I think it's a result of a lot of hard work. But I also think it shows that the UK has great resilience in its financial system, that we're able to step in with one of our biggest UK banks in a situation like this and protect a very important sector.
No. Well, let's discuss this with Janet Moyi, who's head of market analysis.
So the fear is obviously what you're worried about in these situations is the contagion. It's called contagion is the word that they use, and it causes a wee panic. So now people that are who have money invested in banks like this are now scrambling to get it out, and this is causing the aforementioned run on the banks, right, on a bank, and the government is trying to avoid this. Now, I don't know if you remember, this is obviously people living in the UK, but the 2008-2009 collapse. Do you remember Northern Rock in the in England? That was the one that started it all. Can you remember that? The run on the bank, people like queuing outside, and that was what it was. And the government stepped in and guaranteed deposits, didn't they? But it didn't stop the collapse, I seem to remember. We're all still suffering from it. We've been living under 12 years of Tory austerity ever since in this country. So, So that's the fear, is that there's a contagion. And you got to remember, the reason that this is significant is the entire financial system is built on a house of cards. Everything is over-leveraged. You know, you used to be able to, a bank could lend you money if they could invest or make loans out up to 3 times the amount of gold they had deposited in their bank. That's the way it sort of worked at one, and then that goes out to 9 times, and then it goes out to, and then eventually they get rid of the gold, and then it's just, so it's all a shell game anyway. The whole system is based on you sort of squinting and just pretending that this is all real. It's not. None of it is. It's all fake. And as long as we just keep our mouths shut and say nothing and just carry on, and don't panic, we'll be grand. That's the way it is. But when these things start happening, you get the run on the back. It's like a herd of, antelope in the panic, and they all just bolt. You see it in the nature document, they just bolt, and you can't big thing of bison in Africa, and you can't stop them. You're not going to stop them, and that's the way these things tend to take on a life of their own. So we'll see. I mean, this is early. This has only happened, so we will see. It could be the trigger to the end of civilization, and by Friday, this might be my last podcast, because I won't be able to get the fucking internet. There'll be no internet left. It'll be dead. So, as I said, here's a wee video. It's a good one, actually, of a dude explaining about bank contagion. He explains a lot more, actually, about why we ended up here. So let me just
Governments are rushing to reassure citizens that their money is safe after the US saw its biggest banking collapse since the global financial crisis. Silicon Valley Bank's demise was closely followed by that of New York-based Signature Bank. The US insists a repeat of 2008 is not on the cards. But how contagious could the problems be?
After the collapse of Silicon Valley Bank on Friday and the sudden shutdown of New York's Signature Bank over the weekend, US regulators are taking extraordinary measures to avoid the spread of a larger banking crisis. The Biden administration said that starting Monday, all clients will be able to access their money and that all deposits will eventually be protected, including the uninsured ones above $250,000. On Sunday, Treasury Secretary Yellen said that the measures are not a bailout like that of 2008.
Well, let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and we're certainly not looking, and the reforms that have been put in place means that we're not going to do that again, but we are concerned about depositors and are focused on trying to meet their needs.
According to U.S. officials, the rescue operation will be funded through federal banking insurance reserves and not taxpayer money. While U.S. regulators had to trigger the special measures after failing to find a buyer for Silicon Valley Bank, the British government was able to facilitate a private sale of the bank's UK arm to HSBC Holdings for the symbolic price of £1.
Well, let's discuss developments at SVB and the implications.
So, you're up to date, right? Now, it was initially said that the deposits up to $250,000 were basically insured by the government, but the Fed, which is the organisation that looks after the American banking system, the financial sector, they charge banks. They've got money themselves, so they're using that money to cover what's going to be losses. So it's now everybody's deposits over 250,000 as well, but they're not going to have it because you're going to have people. I mean, apparently, I heard today as well, Oprah Winfrey had something like 600 million involved in that bank, invested in that bank. So, I don't think they're going to cover the likes of that. I don't see how they can. And if they do, then they're going to have to use taxpayers' money to cover those massive losses. And then once you start getting into other banks, the problem is if the contagion takes hold and it rolls through the financial system, although they're saying now it's not taxpayers' money, because people will be mad if it's taxpayers' money after. It's within recent living memory, that those big American banks got bailed out and caused the global financial crisis, as I said, under which we are all still living and feeling the echoes of that to this day. People remember that still. People in America, people lost their houses and their careers and all sorts of things. So that's why they're stressing no taxpayers' money is going to be used to do this. But if it gets any worse, they'll have no choice, right? So back to the video.
Worldwide with Moritz Schullerich. He's Professor of Economics at Sciences Po in Paris and the University of Bonn. Thank you very much for joining us on the programme. Let's get straight into that issue of contagion. Is there a danger of the US banking sector beyond SVB and Signature Bank falling into a similar situation?
Yeah, thanks for having me. So, I mean, much less than last night in terms of contagion risk, because the US government really has taken quite decisive action. The US is, I would say, traditionally good at crisis fighting, at financial crisis fighting. So they've really put something together over the weekend that should reassure depositors in these two banks. This being said, these things are inherently difficult to forecast. And the truth is the problems that brought down Silicon Valley Bank and Signature Bank are not limited to these two banks. So the question is, who else is out there? And I bet you many market participants are trying to find out right now who the next candidates are in line.
So the conditions that you're talking about, are we talking about their exposure to the tech sector and in case of Signature to cryptocurrencies? And are other big banks?
No. It's much simpler than this. No, it's much simpler than this. There's no. I mean, the tech angle is secondary. What has happened is that interest rates have risen, as we all know, quite significantly over the past a year or so, and these two financial institutions had invested in bonds and long-term interest rate products that have lost significantly in value because, they bought them for as an interest maybe of 1 or 2% a year ago, and now the yield on these is 5-6%. It means that the price has gone down substantially, and that's.
So you understand what he said there? Did you get that? Did you get what he's saying? Why they've found themselves in this position? Just head it back. It's where he goes. It's simple
because, they bought them for as an interest maybe of 1 or 2% a year ago, and now the yield on these is 5-6%. It means that the price has gone down substantially, and that's not a problem. They get their money back in 10 years or 20 years, depending on what kind of asset it is. But if they have to sell these assets in the meantime, they book a big loss. And since they had depositors who were not willing to wait and were withdrawing their money, they were forced to sell these assets at a loss, and eventually they had more losses than they had capital, so they were out of business. And that big problem that you can look everywhere in the world, that banks and financial institutions have made loans at a year or two ago. Think about a mortgage rate in Germany at 1% or below, and today these long-term rates are at 4%, and so there are financial institutions sitting on considerable substantial losses.
Yeah, we have heard from the governments in the UK and in France, and also the regulator in Germany, trying to just reassure people that their systems are resilient to the sort of thing that has been happening in the United States. Are they just saying that to prevent a run on the banks, or is that justified?
No, I think you have to look very closely, and Silicon Valley Bank and Signature Bank were special cases where indeed these losses met a funding structure of these banks, i.e. a way of these banks were effectively refinancing themselves that was very prone to being unstable and for the bank run situation to develop. That is not the case with your German Sparkasse or others. But the general phenomenon that with this rapid and very, very large, big change in interest rates over a short period, there is interest rate risk out there, as people say, like you lose money when rates rise, and somewhere in the financial.
So, if this has happened to this bank, then it can happen to other banks, right? I'm not wrong in thinking that, am I? So, there is good cause to be concerned that the contagion is a real thing and that it might take a hold. Because if investors and depositors go to move their money, withdraw their money in other banks as well because of this, those other banks could be in the same situation where they bought these bonds 2 years ago at 1% or 2% yield, and now those same bonds, if they're selling those bonds back, they're not going to get that money back. These bonds are now paying 4 and 5%, so those banks are going to lose. So you see why this is a big issue. This is a big deal, and has the potential to be a huge deal.
System these losses are, and investors and market participants are now scrambling to find out who else is affected by that. So my best guess for the coming weeks is that we will still be in a very sort of unstable, wobbly environment where it's not clear if there's anyone else out there who has made similar mistakes, similar to what Silicon Valley Bank and Signature Bank have done. Remember, not so long, half a year ago, we had the same issue in the UK pension system. So it's always the same phenomenon where financial institutions are borrowing funds in the market at short maturities, and they have invested in long-term assets, and these assets have lost in value.
But there will be more rates decisions in the coming weeks. If it's going to be wobbly for a few more weeks yet, when the Fed meets to decide on its next rates hike, will it be taking into account the situation with the banking sector when it decides whether to hike them by 0.25 or 0.5 this time round?
Absolutely. I think the events of the past few days will play a role in central banks' decisions to come. There was sort of an unofficial, if you will, motto for what's going on is like central banks are hiking rates until something breaks. Now something has broken. And it will certainly mean that interest rate increases from here on will come with this caveat of what does it do to financial stability. I think we've just found out there are risks out there, and central banks will have to be quite cautious and be aware of these potential risks in the financial sector. Yeah.
Yeah, something's been set in motion over the past few days, hasn't it? Well, Professor Moritz Schullerich from...
So there we go. Professor Moritz Schullerich. Mr. Smarty Pants. So here on Twitter, let me show you a few wee incidences. So, let me just get the resize that for you. Get it to the right size. There we go. So there's Twitter. So, why is that? Oh, sorry. Bear with me. Let me move this. Ah, there we go. So, deplorable for Trump 2024. What a great name. So she says before the Silicon Valley Bank collapse, executives sold a large number of their shares. Gregory Bakker, CEO, sold 11% on the 27th of February, which is only 2 weeks ago. Michael Zucker, General Counsel, 19% on the 5th of February. Daniel Back, Chief Financial Officer, sold 32% of his shares on the 27th of February. Same day as the other dude, 27th of February. Michelle Draper, CEO, 25% on the 1st of February. These motherfuckers should be in jail. And there's the list. You can see it. Will that open for you? Maybe... no. Okay. But you can see it there. It's all on thing. And you can go into that list and it shows you all the executives at the bank who sold shares recently. And it is all recent. It's all within the past month. Those fuckers knew. They knew something was up. They knew something was up. They should be in jail. And everyone's saying it. Put these people in prison. In Deus nos fides says put these people in jail. And then that's a good point. Jojo J says, is there any point in pretending we have regulators anymore? Yeah. And if this doesn't end up getting bailed out by the taxpayer, I'd be amazed. I just don't believe it. Here's some more. Ben Norton, well-known journalist, he says U.S. Treasury Secretary Janet Yellen claimed the government won't bail out Silicon Valley Bank, but this is just a bailout by another name. The Federal Reserve's Bank Team Funding Program is giving loans with collateral valued at par, not at market value, with no haircut. So that means that these people are just getting their money. Yeah. And then Midas, that's not Midas, is it? Midas Touch says, the moment when Donald Trump removed the Dodd-Frank regulations that would have prevented the Silicon Valley Bank collapse. So Trump removed the regulations that would have prevented this back in May 2018. And there's someone else who is making a great point. Mark Cuban, bail out Silicon Valley Bank tonight. Feds approved. Lloyd Blankfein, Goldman Sachs needs $824 billion. Feds approved. Jamie Dimon, JP Morgan Chase needs $416 billion. Feds approved. Average Joe, my wife's got cancer. Can we get Medicare? Feds, we're broke. I hear you, brother. I hear you. So here, this tweet is a good example of the scale of what went down so fast. Silicon Valley's banks customer withdrawal made history. $42 billion was withdrawn on Thursday. That's $4.2 billion an hour. The previous largest bank run in modern history was Washington Mutual Bank in 2008 and totaled $16.7 billion over 10 days. History is being written. It's not a fucking sort of history you want being written, is it? Like, but yeah, unbelievable. And then there's Bernie Sanders, the sheepdog for the Democrats. I'll read it out to you there, but it's on the screen. He says, let's be clear. The future of Silicon Valley Bank is a direct result of an absurd 2018 bank deregulation bill signed by Donald Trump that I strongly opposed. 5 years ago, the Republican director of the Congressional Budget Office released a report finding that this legislation would increase the likelihood that large financial blah, 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 blah. What else does he say? That's not a bad Bernie impression. It's not great, but it's not bad. Now was not the time for U.S. taxpayers to bail out the Silicon Valley Bank. If there is a bailout of the Silicon Valley Bank, it must be 100% financed by Wall Street and the large financial institutions. We cannot continue down the road of more socialism for the rich and rugged individualism for everybody else. I think I've morphed into somebody else there. That doesn't sound like Bernie now. Let us have the courage to stand up to Wall Street and repeal the disastrous bank deregulation. Not going to happen. All bullshit. Blah, 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 blah. We know what we need to do. So, and then here's Owen Hayes. I don't know who that is. He says, for Irish readers, the US government just burned all bondholders, but saved hundreds of thousands of businesses and jobs in the Silicon Valley Bank without indebting an entire country and multiple future generations. If you're wondering how the Irish bank bailout could have been different. Okay, so but this isn't over yet. We shall see. So is there a better way? Is there a better way? If it goes to, and we're done now, after this, we're finished. What happens if there's bailouts? And there's going to be bailouts. I'm fucking certain of it, right? In July, this is an article from opendemocracy.net from August 2019. I found this now. In July, a series of earthquakes hit the US state of California. After a relatively quiet few years, they were a jolting reminder that parts of the region are prone to seismic activity and overdue for the big one. So too has a recent announcement of a yield curve inversion. Right. So this is financial stuff. It has been a little more than 10 years since the US financial system imploded, ushering in the worst economic crisis in 80 years. Globalization and the interconnectedness of many economies ensured that the crisis spread rapidly, engulfing much of the world. We often forget now how existential the threat really was. You might forget, mate, I don't. There was a genuine fear amongst the world's political and financial elite that capitalism as they knew it was over. In the end, however, they managed to save the existing system through a series of massive government economic interventions, specifically rescuing major financial institutions and pumping trillions of dollars into capital markets. We remember that, don't we? So, we'll roll on. It's quite a long article. We won't read it all. Back in 2007, 2008, very few people saw the financial crisis coming. By the way, if you want to watch a movie about this, and I've watched this movie a few times, I think it's fucking brilliant. Watch a film called The Big Short with Bradley Cooper's in it, and the Welsh dude, Batman, he's in it, and Michael Scott from The American Office, he's in it. I can't remember their names. The US government's immediate response, it's called The Big Short. You should watch. It's really, really fucking good. And that guy, the Michael Scott, Batman, the character he played is now talking about this right now. So I should have fucking linked that. Right, I'll follow that. I'll follow up with that. He's now warning there's a big fucking collapse coming, and this is the start of it. So, and he was right about the all shit. So, sorry, got distracted there. back to the article. The US government's immediate response was to pull out all stops saving the failing banks. This included providing more than 700 banks with capital injections through the Capital Purchase Programme, part of the TARP, what they call TARP, the Troubled Asset Relief Programme. In return, the government, through the Treasury Department, received preferred securities with limited or non-existent vote, blah, blah, blah. So that's what they did. They basically threw money at the banks. There were certain conditions put in place, but those conditions were they were sunset claused, so everyone went back to the fucking people that fucked it all up in the first place, which is what the head of the next paragraph called field reform. As the immediate threat from the financial crisis began to subside, attention in the United States turned to reform. The centrepiece was the 2010 Dodd-Frank Wall Street Reform and Consumer Protection Act. Dodd-Frank was ultimately a weak piece of legislation. It made very few structural changes to the financial sector, etc., etc. And then, as I showed you earlier on, that was what Donald Trump overturned in 2018. So whatever they put in place, which wasn't good enough anyway, was overturned by the Trump administration. So what is the solution? Bailout, public ownership. So socialism for the rich and rugged capitalism for the rest of us. If these institutions are so essential to the functioning of our society, not just our economy, it's bigger than that, our society as a whole, then they're too precious to be left to the whims of the open market. That would be my argument, and many others have made it much better than me. So I have always said the energy sector, the banking sector, it's all important, what we would call important sectors that make up the structures of our society. There should be a public version of those, a publicly owned version of it. There should be a publicly owned bank. There should be a publicly owned oil and gas company. There should be a publicly owned with everything that's essential, right? So the reason being is that will serve as a market leveler. So these corporations that we've witnessed recently posting the biggest profits that they've ever posted, they won't be able to do that because there's going to be a public version of them acting as a market leveler. And we know that these companies are just, it's the greed has overtaken them, and there's no public good in them. There's no public good in them. And if these industries and these sectors are so essential to the proper functioning of our societies, of our communities, then they're too precious to be left to these greedy bastards, right? That's my argument. So the public ownership alternative, this is the point of this article for me. When the next big financial crisis occurs, one or more of the large financial institutions will likely once again become reliant on public support. And this is what the point. Are we here? Are we at this point now? In such a moment, these companies can be deprivatized rather than simply bailed out. During the 2008 financial crisis, various commentators and experts actually came out in favour of short-term nationalisations, forms of which were implemented in several cases but were generally emphatic in their rejection of long-term public ownership. For instance, economist Adam Posen stated in 2009, "Nobody in their right mind wants the government to be in the banking business any longer than it needs to be." Is that right, Adam? Such offhand judgments, however, deliberately ignore the extensive and often highly successful experience with public banking, both in the United States and around the world. Recently, Thomas Morris has estimated that there are nearly 700 public banks operating globally with some $37 trillion in assets. In Germany, for instance, there are close to 400 publicly owned municipal savings banks with more than 1.2 trillion in assets and approximately 210,000 employees, unlike some of the larger banks. according to The Economist, came through the crisis with barely a scratch. And here in Ireland we have a credit union system. They were the same. They survived these things fairly easily. Well, I don't actually hear me saying that like I know, but none of them closed down. In North Dakota, the publicly owned Bank of North Dakota just celebrated its 100th year anniversary. The bank, which has $7 billion in assets and a loan portfolio of $4.5 billion, has been widely credited with helping the state weather the last financial crisis by backstopping local banks with liquidity, thereby ensuring the state had the lowest foreclosure rate and lowest credit card default rate in the country, etc., etc. So you can see the argument is that there is if they get bailed out, nationalise them. End of story. And it needs to happen. And if it doesn't happen this time, and listen, hopefully, obviously, what we hope for is that this is all done. We're not going to talk about this again. We're going to say, oh, remember that bank, Silicon Valley Bank thing? Oh, yeah. We'll remember that in a few months. Hopefully. That's the fucking hope. But is it going to happen? We don't know. So, but if we come back to this, or if this contagion carries on and gets worse, it has to be nationalisation. And obviously, because of the interconnectivity of our financial institutions, America sneezes, everybody else gets a cold. So if it will happen in America, if it starts in America and it gets out of hand, it gets big, we're going to feel it here. And if we're going to bail people out, we need to nationalise these people. But we are obviously being ruled by ideologues who don't believe in that sort of thing. So this is where we are. So there you go. You heard it here first. Silicon Valley Bank, and hopefully that's us done talking about it. But we shall see. Anyway, there we go. That's the pod for today. I might get a chance to do another one later on in the week. And if I do, I'll put it out because I feel like I owe it. But that's today. Silicon Valley Bank. Keep an eye on that story. And come and see the Bonneville's. Where's the poster? There it is. Come and see the Bonneville's on tour. Starting 4th of April in Edinburgh. Oh, we've got a bit of good news too. We've got some music and some TV shows and movies and shit. So, yeah, we'll get to that. I'll let you know all about that soon. So, yeah. So, that's us. We're done. Toodles. I'm going to go now. Bye-bye. Disappearing off the screen. Like, share, subscribe. Come and see us and head over to the YouTube and do all that stuff. Alright, bye.